Welcome to Home Biz Tax Talk. My name is Lysandra Everett, and I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune in my show, you're going to hear about topics that are important to the home business community. All right, y'all, in these business structures. Okay. Quite often, I get questions about what kind of business structure is the right one for this one. What about this kind of person? What about that kind of person? So most recently, I got a question about what's the best kind of business structure for a real estate flipper. Okay, so listen, there is no one right answer for everybody. Okay, it just no, it just isn't. So, but what I want to give you today is 5 things that you need to consider before, for looking at business structures. These are 5 things that you need to look at, because the fact of the matter is that when it comes down to business structure, there's so many moving parts that you have to find the right thing that fits for you. And that's not going to be the right answer for everyone. All right. So number 1 is, what is the type of business that you have? Okay, because there are some businesses where, you need to be a limited liability company. There are some businesses where you need to be a C Corp. So it just depends on your type of business. And so when I say that, is what is the potential for liability? What is the potential for lawsuit? So like, I have a client who makes mobiles, like things that hangs in babies' beds. Well, they have they have small parts to them. So you need to be a limited liability company, because if, a kid pulls a part and, chokes on it or chews on it or something happens with that, you have the potential for a lawsuit there. So you want to make sure that you protect yourself in that sense. Another one of my clients runs a driving school for teenagers. Okay. You go out here on these streets and get in an accident with somebody's kids, even if it is their fault, guess what? Somebody is going to be coming for you. So you definitely want to have a business structure that provides you some liability protection. Okay. But if you just over here, making, t-shirts or something with a low potential for risk, for lawsuits or something, then you know what? Then you just being a sole proprietor just might be fine. Okay. So it really just depends on the type of business and the type of liability that's possible for you. Okay. So that's number 1. Number 2, how much money are you making? Okay. So here's the deal. Folks want to be, go sit over here and try and boss out with a business structure, and you don't have no cash. Okay. It don't work out that way. All right. Because it's not the fact that of how much money you make that determines whether or not you have a legitimate business, because you can gross 150,000, but if you got 140,000 going out, you only making 10 grand, boo. So you are got to look at really how much money are you making, how much gross, and what is your profit after you get done with all of your expenses. Because just because you have $150,000 business, if you're not profiting $150,000 business, $150,000, that's 2 totally different things. Okay. So you need to look at how much money you making. All right. And so number 3 with that is your ability to outsource your bookkeeping and payroll. I am so over my business owners thinking that you're going to do everything in your business. You're going to do the marketing. You're going to be the visionary. You're going to do the bookkeeping. No, that is not how business works. Okay. Because you look at all of the business owners out here that are bossing out. When you look at people like a Richard Branson or something, do you really think Richard Branson is bookkeeping? No. He is not. Okay. So you have to have the money enough to outsource your bookkeeping and payroll, because as your business grows, you can't do this. When you're getting started, you start out bootstrapping, doing your own bookkeeping and stuff. Everybody does that. But as you grow, when we're talking about business structures and stuff, if you don't have somebody that can manage your books for you and keep your books straight, that right there is the number 1 key, because it doesn't matter what type of business structure you have. If your books are jacked up, if you still commingling funds and all of that, you don't know how much money you making, you don't know how much money you spending, dude, you can't run a business like that. you've got to have somebody that's going to keep your books straight so that, when it comes down to if you do get sued, if you've got jacked up books, that business structure that you got to provide liability protection, that liability protection goes out the window. It's a term that's called piercing the corporate veil. That means that it don't matter what kind of liability protection you got with your business. If your books are jacked up, they come in for your personal stuff too. All right. So it doesn't just happen because you're a sole proprietor. Okay. That does happen as a sole proprietor where your personal assets, you as a person are totally responsible. If somebody sues you, yes, they can come for your house as a sole proprietor. However, if you have a corporation, an LLC, a S corp, or a partnership, whatever, if you have all of that and you got jacked up books, they can attach your personal assets anywho. All right. So don't get, get all froggy because I have an LLC. Dun, dun, dun. No, somebody will punch you in your Superman chest with some kryptonite called piercing the corporate veil and take your personal stuff. Anywho, okay. So this is why you really need to look at being able to outsource your bookkeeping and payroll so that you can keep your books and your money, your business money, your personal money separate. All right. So the next one is compliance requirements. Okay. When you go and get these business structures, there is more compliance. When you go get an S Corp or a C Corp or you have an LLC and you elect this corporate treatment, you have to know what the compliance is and you have to abide by that. There's more compliance requirements at the federal level, but also what people don't talk about is the state requirements. Your S Corp, your LLC, these are more state-run entities. And so even though you might not have a federal requirement to pay taxes, your state might require you to pay a business privilege tax or, a tax based on, how much money you make, or they don't care how much money you make. They base amount of money. Okay. They also have annual filing requirements. So 50 different states, 50 different requirements. You got to know what's going on in your state to see if, this business structure is really worth it. Because a lot of times, if you ain't making enough money and you can't outsource your bookkeeping 9 times out of 10, it doesn't make any sense to change business structure. Anywho. Okay. So these are the things that you got to know. And the last thing that people don't think about is knowing your effective tax rate. All right. If you don't know what your effective tax rate is, go review my YouTube channel. There is a video that talks about your income tax bracket versus your effective tax rate. Okay. So here's the thing. When you're looking at, how much money you're earning, so your gross amount is going to have you in a particular tax bracket. But after it's all said and done with your deductions, tax credits, and all that, your effective tax rate is going to be different. Okay. So you might start out in the 25% tax bracket because of your income, but your effective rate, which is the amount that you're actually paying, might be 13%. So before you go and jump off in the C corporation ocean because you heard is capped at 21%, you need to know if you're paying that anyway. Because if you are only paying 13%, why would you just go jump off in a C corp just because you heard that the tax rate is flat and it's capped? Why do that? You got to know how much you're paying. Okay. So if you don't know your effective tax rate and then you go jump off in some, S corp or whatever because you heard you could save. Okay. Then you wind up paying more and it costs you more for a business structure that you don't even need. Okay, so those are the 5 things that you need to think about before you go and form some business structure. This is why you need to pay for a consult with a professional, because then they can look at your situation. They're looking at how much money you're making, how much your spouse is making. If y'all got 2 6-figure jobs, then you might need to start out as something else in order to keep your effective tax rate down, right? So if you've got, your type of business, you got all of these things that you need to look at big picture wise and make the best decision for you. This is why you need to hire somebody. This is why you can't go get an answer from a Facebook post, from a YouTube video. Google don't know it all either. All right. You need to sit down with somebody who can look at your past tax returns, look and provide the analysis part for you. See, that's what you're paying for. You paying for somebody that's smart, seen some things and go, okay, so here's what I recommend. But ultimately, you need to realize that tax professionals cannot tell you what kind of business structure is best for you. Lawyers and all of that, only thing we can do is tell you tax-wise, this is how this is going to affect you. You and you alone are ultimately responsible for that decision, but you still need to seek competent help. I don't care if you go see an attorney, a CPA, a tax professional. At the end of the day, the buck stops with you. You have to make that decision. The only thing that we can do is help you put the parts together, and then you figure out what's best for you. I hope that makes sense, you guys. So, all right. So that's it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see y'all next time. Bye.